Let's cut to the chase. Putting all your money in the S&P 500 isn't the only way to build wealth. That's the classic advice, but it's not the whole story. The biggest returns? They're often hiding in places most people never look. The stock market is just one tool. Relying on it alone means missing out on huge opportunities. Today I'll show you 3 alternative investments that have outperformed the market, and you don't need a fortune to start. Ready to see where the real money is made? Let's dive in, smash that like button, and let's get started. First up, real estate crowdfunding. You don't need millions or landlord headaches anymore. Platforms like Fundrise let you invest in major real estate projects with just a few $100. These platforms pool money from thousands of investors to buy large-scale properties, deals once reserved for the ultra-wealthy. The result? Access to institutional quality real estate and passive income. Historically, private real estate has delivered strong returns, often beating the S&P 500 with less volatility. You invest, experts handle the rest, and you collect quarterly dividends. No midnight calls about leaky faucets. The catch? Your money's tied up for several years, but that illiquidity often means higher returns. It's a long-term play, not a get-rich-quick scheme. For a portion of your portfolio, this can be a powerful wealth builder. Real estate crowdfunding is now open to everyone. No massive capital required. It's a smart way to diversify and grow your wealth. Consider the trade-offs, but don't ignore the potential. Let's move to the next alternative. Next, peer-to-peer lending, where you become the bank. Platforms like Lending Club connect investors directly with borrowers, cutting out traditional banks. You fund small portions of many loans, earning interest that would normally go to the bank. Returns? Many P2P investors see double-digit annual gains, often higher than stocks. The key is diversification. Spread your money across hundreds of loans to minimize risk. Yes, some borrowers will default, but with enough loans the impact is small. You get monthly payments of principal and interest, steady cash flow you can reinvest. It's more active than index investing, but you control your risk and returns. Think of it as building your own high-yield bond portfolio. P2P lending isn't risk-free, but the potential rewards are real. Do your homework, diversify, and you could see impressive results. Ready for the final alternative? Let's talk about investing in the unattainable. Third, fine art. Investing once only for the ultra-rich, now accessible to all. Platforms like Masterworks let you buy shares in multi-million-dollar paintings by artists like Banksy or Monet. Instead of $10 million, you can invest $1,000 and own a piece of a masterpiece. Why art? Over the past 25 years, blue-chip art has averaged 14% annual returns, outpacing the S&P 500. Art's value doesn't move with the stock market, making it a powerful diversifier. When stocks drop, your art investment could hold steady or even rise. Masterworks handles storage and sale. You just invest and wait for the painting to sell. When it does, you get your share of the profits. It's a passive way to invest in culture and history with serious upside. Art isn't liquid, but for a portion of your portfolio, it's a unique growth opportunity. The barriers are down now, anyone can invest in fine art. Diversify beyond stocks and discover new ways to build wealth. Here's how to get started. So there you have it. Real estate crowdfunding, peer-to-peer lending, and fine art investing. 3 proven ways to diversify and potentially outperform the stock market. Don't put all your eggs in one basket. Mix these alternatives into your portfolio. Always do your research, understand the risks, and never invest more than you can afford to lose. Smart investing is about balance and informed choices. If you found this valuable, hit like and subscribe for more data-driven wealth strategies. Thanks for watching. See you in the next video. Subscribe for more investment tips.